big week last week for the Fed. You know, they did their meeting, CPI came out, all of these reports, and the Fed got some pretty good information, I think, and we'll see what the market is going to do with this information, especially concerning inflation. Zillow comes out with a negative real estate report on what the market's likely to do for the rest of this year, so I thought I would share that. More importantly, look at what is the opportunity if you're watching this as a home buyer, home seller right now in the market. And if you're a real estate agent or someone like myself who's in the real estate world as loan officer, what's the opportunity there? Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And man, we got all good information on the inflation and all the things over the CPI. If you look at headline, core, all of these things showing that inflation is starting to come down, at least the measure of inflation. There's this fear that we could have this kind of go down and then pop back up, which has happened, in the years when they've tracked it. No one has a crystal ball, but obviously it's headed in the right direction. Unemployment and some of those numbers ticked up, which means that puts the Fed more likely in a position to cut rates as the year goes on. And I think a lot of people are right now waiting for rates to fall to buy a house, and I'm going to give you my thoughts on that because I really think there's an opportunity now that people aren't taking advantage of. But let's look at rates here for a second. And one of the things I always point out is we have been range bound with rates because we hit this cycle high of 8%, at the end of last year, and then we dipped, and then we have not been able to go below this 7% rate. And you can see here we hit this again. Now remember, everyone's rate's different. Some people pay points, and there's lots of ways to manipulate rates. So this is just like getting on the same scale to measure what rates are doing. And what this is showing is that rates have hit this really 7% range again and kind of started, going back up. And when we look at the Fed and what's likely to happen here is that this is a measure of what the market is anticipating. And right now the market predicting for the next meeting in July, pretty much a 90% chance nothing will change. But when we look 1 month out, now all of a sudden, for the first time in a while, we actually see a 56% chance that the Fed could cut rates. And really the market starting to anticipate 1 to 2 rate cuts this year. The Fed really telegraphing they're going to do 1. I think the bond market, maybe 1 to 2. I think more to 2. It really depends also on how big of a cut they do. Is it going to be 25 or 50 basis points? These are all things that will affect the market, which once that starts happening and the market believes it's going to happen, rates are going to fall. The market is always pricing in the future, and so we'll see what happens. At the same time, we have Zillow coming out with a report that they believe that their home value sales forecast that they're doing for May, they're now predicting negative growth. They're saying that the home value forecast should drop a negative 1.2%. I believe Redfin had a report at 1%, which does make sense because typically in the summer, this is where we hit the peak. So they're saying, 1% for most median price would be about $3,000 to $5,000 drop in the price. That is not the opportunity. I can tell you right now from doing loans for over 20 years, if you get a $5,000 reduction on the price, it actually makes zero difference. 5 years, you won't even remember what you paid for the house, and that $5,000 discount will affect your payment about $25. But there is a opportunity, in my opinion, right now in the market, and one of them is, so if you look right here from Resi Club, they did an analysis spanning 800 metros and 3,000 counties, looking at home prices and what happened between May of 2023 and 2024. And that is a good time period to look at because remember, rates have been super high, compared to affordability and all the things that are going on, which has driven a lot of home buyers out of the market. And so if we were going to get major price declines, that's likely when it was going to happen. And when we look here, really this whole map showing there's been very little price deterioration anywhere. And when we look here in Florida, where I'm at, you can see if we kind of zoom in here to southwest Florida, that there have been some places that have had some declines. I'm here in Orlando, which is about a 3.3% increase year over year. Then at the same time, you have this Redfin article coming out saying home sales fell to one of the lowest levels record in May. All that to say is that we've got buyers that are sitting on the sideline waiting for rates to fall, and at the same time, predicting a pretty flat market, but prices, if you look at all the big indices over the next few years, predicting prices to increase. So what's the opportunity if you're a home buyer and you just want to look at the numbers, right? It's very difficult to time the market. If you're waiting for a big price correction, that's likely not going to happen. And even if there was a minor price correction, I showed in last week's video, a $10,000 price reduction for most people would make almost no difference in actual when you look at getting the discount to what their payment would be. So the big opportunity to me is this right here. When you look at days on market and we look at the last year at this time, the average days on market were 45. This has slowly been going up and up. It actually did drop a little bit here in May, but back down to 54 days on market. That is the opportunity. If you're a home buyer, that means that the terms you're going to get now are better than they're going to be as that days on market fall. As rates fall, days on market will fall, sellers will get less flexible. And yes, rates could be lower, but instead of refinancing during that time, now you'll be competing with other people. And you might eventually be competing with homeowners who have these really, really low rates, but as time goes on, they're getting more and more pushed to maybe put their home on the market because maybe they need extra bedrooms or they've moved and they've really been having a large commute. And as rates and that gap closes, those sellers will start saying, you know what, we're going to put our house on the market, take that equity and go ahead and make that move up. Which again, makes it more difficult to compete when you're a first-time home buyer. So days on market, to me, the way I hear that is it means better terms. That's the opportunity, not price. You can get the rate bought down to a really low rate. Builders are buying down rates to record low rates, not record low, but low for this particular time frame. So, and you have sellers who, if their house has been on the market 30 days or so, they're going to be more flexible, and you can use that to do 2-1 buy downs, help with closing costs, and then you add in the summer. Of all the years I've been doing this, there are more first-time homebuyer programs out there right now than I've ever seen. Grant programs to pay down payment, closing costs that are pretty easy to qualify for. And that's if you're a home buyer and even a home seller, the market is going to be a good time to be buying and selling really throughout the next few years. Now, if you're in the mortgage world or real estate world like myself, I think a lot of people are waiting for the wrong thing on that end as well. And so I pulled up this really cool 20-year spreadsheet or 54-year spreadsheet. And I wanted to show you something. So I really like looking at the numbers. I got this from the One Rental at a Time website, Mr. Zuber, big fan of his site. But if you look here in 1978, there were 3,986,000 homes that were sold. If we kind of take a view here from, okay, so we look here at 1978, when did transactions get back to 3.9 million? Well, if we scroll through here slowly, you can see that it took to almost 1995 before those came back. And why I say that is because we hit over 6 million in transactions and fell down to 4 million. And all the indication is that there's going to be a tailwind, albeit not a big one, meaning we are not likely to see 6 million transactions for a while. Then you couple that we're going to have these big changes, sweeping changes in the real estate world with the NAR lawsuits and the changes on realtor comp and those things. What the opportunity is different than what people think. A lot of people are saying, well, I'm going to wait until the market changes, but you got to be changing with the market. A lot of your competition is not going to make it through these changes. A lot of people waiting for transactions to come back. That may not happen for a while. Meanwhile, there are real estate agents and mortgage people having record quarters, record years. And what is the one thing, the magic thing that makes a difference? It's actually not magic. They have a few good things they do really, really well. So if you're looking for how to survive in this market, not even worry about what the changes are going to happen, because changes are going to happen. They've been happening ever since I've been in the business for the last 20 years. You're either waiting for the market to change or you're changing with the market. And what that looks like is updating your daily success plan. Knowing these changes, how are you integrating these in? How is, are you practicing an incredible objection handlers and, a buyer's presentation for when you're meeting with buyers? I know a lot of agents are doing that now. But more importantly, if you don't have buyers, you don't have a buyer's presentation to give. So what are the daily activities that you're going to be doing every day to get those buyers? I'd love to help with that. Any questions on the market? Any questions on special loan programs? This is Rayce Robinson, your favorite Florida mortgage broker. That's the opportunity I see in the market right now. As more information becomes available that moves the market, as always, I'm going to cover it right here. Have a great day, great week, and I'll talk to you soon.